Hello, everybody. Jim Malone here, comes to you live on Dallas Trading Floor. It is Wednesday, and the market really died at the end of the trading day today. Amazing! It just kind of just fell out of the sky, and wow, we were doing great in the morning, but not so much now that now that the day is worn on. Just kind of a tough day to trade all the way around. I did get stopped out of a position, and I kind of want to show you that real quick here. Let's see if I can go back to there. We go. Nope. Oh. I did get stopped out, and this is the one I got stopped out of. Global Foundries. The tech's pulled back pretty strong today, and it's just been kind of difficult. This one, it was down almost 10%. I just am amazed at that. But fortunately, I had my stop losses in. So, always a good thing. I always, whenever I enter a stock, boy, I tell you what, I'm always looking at putting that stop out loss in. So let's look at the live chart of GLS. This is a GFS. This is a competitor potentially to Taiwan Semi, and interesting stock. But again, it's just taken an absolute header here. I mean, it was moving well. It was up above the buy point 73.25, and then boom, there was just a big sell-off. It's coming back a little bit after hours, but boy, I tell you what, it's been a little bit of a brutal downturn at the end of the day. Kind of want to show you what I have in the small portfolio. We're up and everything in the small portfolio, but we were up more, and that's for sure. We're still up on Hess. We're up about 8% in 13 days. Berkshire's doing pretty well. That's, of course, a value stock. 27 days, we're up about 8% on that one. Arista Networks, ANET, that was doing a little bit better. It's pulled back a little bit, but still pretty good, up about 6.36%. AMD, barely up 1% in 7 days. It definitely pulled back. Quanta Services, this is in the oil services area. It's up about 2%. Tesla, and this is the one we really want to talk about. It seems like it held at 1093. This one that slide was taken, but let's just take a look at the at what's going on with Tesla. It did pull back, but and it's off a little bit after hours, but not too bad. It seems like Tesla's holding on, which is a good thing. After hours, it did close at 1093.99, but then after hours it moved up a little bit. Let's take a look at the 10-minute chart to kind of see how it traded throughout the day. Just really interesting. I mean, we had this gap up, and then it's been moving down, and it seems like it's getting some support right about 1085, 1090. The hurdle is basically 1100. So that seems to be where we're seeing some resistance from Tesla. But I do expect, hopefully overall we will see it move higher. That's just been a kind of a interesting thing. I want to show you a very interesting stock. It's in the oil sector. This is kind of in my sort of ongoing strategy of, very inexpensive stocks that may show some promise. Just wanted to show you this one. Not obviously a recommendation. Oh, that's the Etf Strategy. We'll show you that in just a second. This is not a recommendation, but it's just an interesting stock that I think definitely you should take a look at. It's under $10. It's called TGA, Transglobe Energy Company. It is it's in the 99th percentile. It is just above the buy zone, and it might be potentially something to look at. We did buy a very inexpensive stock yesterday, EGY, and that held up pretty well. Pretty well. So this oil area seems to be producing some very, very low multiple stocks. Now the question is, how long will this last? But look at this stock. I mean, it's an interesting stock. it's under. It basically has cash flow. It made 91 cents a share, and it's a $3 stock. So that's incredible when you think about it. It's got a PE ratio of 7. That's pretty amazing when you think about it. A PE of 7 means that it is just it's very, very basically it's it's kind of, you put your money in, you get your money out kind of thing. This one is interesting. It's don't know a whole lot about it. They basically look for gas in Egypt and Yemen, and it's essentially a Canadian company based in Alberta, Canada, Calgary. So that's interesting here. It is listed, of course, on the New York Stock Exchange. This is in the #1 group, and it is set up actually fairly well, considering everything. It's in a buy range, if you can believe it. The buy point on this one, basically, is $3.50. It's at 375, so it's 75 cents above, 78% above its buy point. And this, what's interesting about this one, it's above the 21-day line, and it looks like it's making a move up. So who knows what's going to happen here? But this is a relative strength of 92, and that makes this basically in the top 2% of all the stocks out there. So very interesting stock. I mean, it hasn't done anything forever. But all of a sudden now it's starting to make a move. If it can move above $4 a share, I think we might have something that makes sense. That potentially makes sense out there. This is the monthly chart, and as you can see, it's been below this $4. But if it can move above this $4, now it tried. And it was rejected. This one, believe it or not, has been as high as $20 a share. So this might be an issue worth looking at. I'm probably going to be taking a position in it, just because it seems as if some of these stocks are making this move with the price of oil going up. We talked about EGY yesterday, and again, I don't totally recommend all of these stocks that are this cheap. But you can't deny something's going on here. This one is up about 16%. This is EGY. It's been up about 16% in a month. Now, for the daily chart on this one, we did have, it was up 17 cents, which doesn't sound like a lot to you, but at $6.59, that's pretty amazing when you consider how inexpensive this stock is. And it's in the top rated area. It's in the oil and gas area. Now, there's a lot of oil and gas companies, but one of the things is that this is set up for actually quite nicely. I did buy this one today, paying an average of $6.68. It pulled back about 7 cents. So this is really kind of in the penny stock category. So I'm down a little bit on this one, but I just kind of have been putting my toe in the water on these oil and gas stocks. We did have a fair amount of buying at the end of the day. So this is something that is very, very interesting, and you might want to take a look at it. The one that I found today doing the screens is this one, TGA. Don't know a lot about the stock, but I do know, relatively reading their bio, that they are engaged in oil and gas exploration in Egypt and in Yemen, and these areas, if we can get past the political situation, there is a lot of gas in these areas. So very interesting stocks. Just maybe want to put it on your watch list. Obviously, not a recommendation here, just a very interesting stock that I found in screening these other stocks. So something that you might want to kind of put in your back pocket, and maybe maybe it might work for you. By the way, if you want to get our list of free ready list stocks, it's easy to do. Just go to this address, https://bit.ly/DTF0101. So this is a good way to go. Also, we do have that available in the if you go to the if you're watching on TikTok, just go to the profile, click on the link, first and last name, and email address, and it'll get you in on that. So that one also is pretty good as well. So without further ado, let's get into some of the questions here. Thanks for holding, everybody. Hopefully, your day wasn't so horrible. I hope that it was better. Tesla fell badly today. Let's take a look at some new support on that to see, kind of where it's going on Tesla. So, Jay is talking about Tesla. I do have a fair amount of Tesla. I have been buying it as it's been moving. It's off. It was off down today, but it has regained. It's starting to in the after hours. It's at 10.95. So where do I think this support is? Well, my guess is the support is right at this reversal line, and that's why I have it drawn. That's why I have it drawn in here. So I do think that the intermediate support is at about 1065 or 1066. That's sort of where I see support in the short term. So, that's kind of where I see support in it, is at 1065 is the support for it's 1065 is support for Tesla in the short term. So that's kind of where I see it, and I see it because of a reversal, and that's the reason why I see it at about 1065, and that's basically right here at this reversal line. So that's kind of where I see support. Currently, we're at an after hours. We're at 1095. So the first hurdle was really at 1,000. We moved above that, and then basically we've been, we punched above the reversal line. That's the reason for the 1065. That's kind of where I think support is for Tesla. If we look at the 10-minute chart on Tesla, we can see that definitely, there seems to be some support right about here, and this is the reason why I am saying about 1065. It's actually a little bit closer to 1075, but to be safe, 1065. That's sort of looking where we're getting support on Tesla right now. So, don't fret. I think we're going to see, I definitely think Tesla has turned, and hopefully it'll move higher. We'll see what happens. I mean, it's always a crapshoot with Tesla, but just that's the way it goes. Okay, thank you very much. Let's look at MasterCard and Visa. Let's look at the payment companies. Let's look at Visa first and see if there's an entry point for Visa. Let's see if we can get that up and in here. Okay. So on Visa, we definitely pulled above that critical 200-day moving average. So that's a very good sign, and it's starting to get viable. It's still not, it still hasn't reversed yet. So that's the problem. Going to the weekly chart so we can take a look at the reversal. Kind of what we've got here with Visa is we've got this reversal line that sort of goes like this from its high here, and that's sort of where we're getting, that's sort of where we're getting the reversal. Let's see if I can get that in there, that alert on it. Yeah. So this is essentially the reversal line, and if we go back to the daily chart, so can we buy this here? Well, I would be a little bit concerned about buying at this level, just because of this 236 high. So we're still kind of below the pivot. We're kind of below it. So this is an area that we could possibly buy it if it moves above. But right now, I think we got to be really, really careful. It didn't quite come up to the reversal line, so we're still potentially in a downward trend. Now, we're very, very close to it changing direction, going to an upward trend. But really, what's got to happen with Visa is it's got to go above about 230. So my take on this is, for Visa, it needs to close above 220, and that's really kind of what we've got to have. We've got to have it close above 220, so that we can get, so that we can get the reversal. Currently, we're in a downward trend right now. This is the trend is downward. So with Visa, I just wouldn't buy it at this point. I would wait until it moves above 230, closes above 230, right in about in here. Why? Because we want to see it reverse higher. So that's kind of where we're at. We're currently, it does look like it's gonna close above that. It did close at 223, in the after hours 224, but I still think that it needs to be a little bit stronger to buy it. So that's kind of my impression of Visa right now. On that is that it just really has to be kind of a little bit stronger in terms of that, just to look better. All right, let's take a question from TikTok. Thanks everybody for holding on. Workhorse, boy, I haven't seen that ticker in a long time. WKHS. I don't think it's probably doing all that well, as a lot of that just business has sort of gone away. And the ticker right now for Workhorse, not a good ticker. I would not be buying this. It's in a downward trend, and it's been in that downward trend quite a while, since last year. As you can see, it made its high up here at about 40, and that happened way back at basically in the December of last year. So it's really been in a downward trend ever since, and not a good look on it. It may have turned the corner, but boy, there's an awful lot of overhead supply, as you can see there. So not a buy for me, anyways. We had decreases in sales, and we've had essential losses. So this is one that might not work. I don't think this is going to work as well as some of the other ones. So I would avoid this one just because it's in a downward trend, and it's lost essentially almost 95, not quite 95% of its value. It's lost about it's lost over 80% of its value. So this is just not one you want. WKHS, I would stay away from this. And if you've bought it and if you've bought it and you're down, I would consider selling this one. The reason, you just don't want to catch a falling knife, and that's essentially what this is. This might reverse higher, but then again, it might not. Many times, a stock, when it goes down this much, it will rally up, but then it will continue down. This has a relative strength of 17, so not something you really probably want to be in right now. Just not a good look on that at all. Cameron, thank you very much. Let's take a look at GNK to see what's going on there. GNK, and that's coming up just there. We go. That's Genco Shipping and Trading, and this one is in the shipping sector, and I do like this sector a lot. 14 out of 197. So this sector is doing fairly well, and definitely something that you could look at. It looks as if it's trying to make a new base here. We did have a buy point on it on a consolidation basis at $20.61. It's currently $23.89. So we are actually at a new cup with handle. This is a cup with handle pattern, very good pattern. The pivot is $21.89, and we're at $23.89. So we're about $2 above that. We're just a little bit extended on the weekly chart. Let's see if we come back to the daily chart, if we can find out anything there. Yeah, we're right at the top of the buy range. So here's the thing, Cameron, on this one. I do kind of like this, but the stock is extended, unfortunately. So it's difficult to buy it at this level. So currently, this stock is extended. Watch and wait. So that's the key here. You want to make sure that you're buying at the right level. The correct entries make a heck of a lot of difference. Even though the market was down strongly today, most of my stocks, with the exception of Global Foundries, they all weathered the storm and retained profit. Why? Well, the main reason was because of my entries. So right now, we don't want to buy any stocks that are extended. That's definitely the case with this one. G&K, Genco Shipping and Trading. I would just not buy this one right away. I would kind of wait on it and just kind of take a wait-see attitude, you know, and go from there. What do you think about PayPal? This is a question coming from TikTok. Of course, the symbol for PayPal, PYPL. And of course, this is really one of the interesting, very, very interesting stocks that really started, Elon Musk on his way to becoming the richest man in the world. So very interesting. I was watching some YouTubes about this very, very interesting company. But unfortunately, you know, it's true. It's very interesting. But right now, you just don't want to be buying the stock. It has a relative strength of 7. Now, will this bottom and turn around? Possibly. This is the kind of stock that might do that. It might just bottom and then turn around and do very, very well. But if you look at this chart, and this is the weekly chart, boy, it looks terrible. This stock was all the way up at about 300. Currently, it's trading for about 118. That means it's lost 2/3 of its value. So that's very painful. Would I short it here? No, I wouldn't short this one. Why? Because I do think that there are going to be some value investors that do come in on this one. And when they do, of course, it's going to be a good deal. But right now, I just think you can't touch it. It's not a good time to be buying. It's not a good time to be buying this stock. So what I really have to say about this is PayPal is not a buy at this level. And this is hard because you think, well, I could get, PayPal's on sale. A lot of people view the stock market as, going into, a discount store and buying something on sale. That's not the case with stocks. You're always buying to resell. So you want a stock that's going higher or coming out of a base. This is neither. So PayPal right now, you just got to avoid it. And you just got to avoid PayPal right now. It's just not working, unfortunately. By the way, if you're watching on TikTok, super easy to take a look at all these charts. Just go to the profile here, and you'll be able to see it on YouTube. We run this simultaneously on YouTube. So let's take another question from TikTok. Thank you very much. Can you do Nvidia? Thank you very much for that. Nvidia, very, very great stock. This one is a little bit different than PayPal because this one is potentially actionable. And I do think that we are taking a different approach with Nvidia than we are with PayPal. Interesting thing about Nvidia right now is that Nvidia has reversed higher. So you can see this black line is the reversal line that I put in here. We are moving higher. It's pulled back to the 10-day line. This is not necessarily a bad place to get into the stock. It's a little bit below its actual pivot. Let's see if we can find that there, if it's showing a pivot. So right now, it's sort of stair-stepped up here. It went all the way up, and the question is, can we get back into Nvidia? I think we can, because it does look like a lot of the overhead supply is been dealt with. What happens when a stock pulls back is that you have what they call overhead supply. That's this. That's this up here. The people that bought it higher, and then as it pulls back, they tend to hold on to it. And when the stock rallies again, like Nvidia is right now, they tend to sell into that strength, therefore retarding the ability for it to move higher. The question is, but I don't believe that there's that much overhead supply on Nvidia. But you have to be careful with Nvidia because it did move up all the way to about 346. Currently, it's at 278. So there's some, but not a huge amount of overhead supply, which will be making it more difficult for it to move higher. Right now, I do think though you could possibly start nibbling here. I'm not in the stock, but it's very strong. It's got a relative strength of 95. The only thing holding back Nvidia right now is it's in this electronic fabless semiconductor group, which it's 45 out of 197, which is excellent. it's just not as excellent as it's been. So definitely, I think that you could possibly start looking at, kind of making a move here on Nvidia. This is, if you're not in the stock already, this might be a place to start building a position. Now, it is, mind you, it needs to come up a lot until it gets to the pivot. But right now, it has a 89% checklist. The only thing that's missing right now on Nvidia is that it's more than 15% from its all-time high. So that you typically like to buy them as they're moving higher within 15% of the all-time high. But everything else is looking very, very good on this one. We are about 20% above the pivot, you're about 20% above the pivot. But this one could be bought at this level. I currently don't own it, but I do own some other stocks that are in the area of this, in the semiconductor fab list. One of the stocks that I do own that I want to point your attention to is Rambus, RMBS. Now, this is extended too, unfortunately. I was buying this basically last week. I did add to my position, though. I do really, really like this stock. It's down a little bit. It was down on the day, but then immediately it pumped right back up. So this one is kind of like a beach ball underwater. I think anytime you get the relief in terms of the market, this one pops right back up, and that's definitely the case here. So right now, unfortunately, you can't buy it because it's extended, but this is one that you might want to kind of take a look at. If we continue this confirmed uptrend, it's very, very likely that many of these held down chip stocks will move higher. So that's something just to consider, and possibly getting a position in some of these chip stocks. So some of them can be very, very good. All right. Thanks, Derek. Derek Rose writes in, hey, Jim, can you please look at AMR? So let's take a look at AMR right now. I'm just putting it right in here, AMR. Go. And that is, of course, mineral. Okay, so this is met cold. I think that's in the cold area. Yeah. So here's one of the reasons, and there's also other reasons why coal, especially metallurgical coal, is doing so well right now, because of the situation in Europe with the high prices of energy. Many of the steel production has been halted. The Russians are not shipping steel. They used to ship a lot of steel. They made up a lot of this. And this void has not been totally filled by the other companies, such as Brazil. Interestingly enough, the U.S. companies now, because of lower energy prices, because of the availability of natural gas, are becoming very competitive. And some of the steel producers here in the United States, such as Timken, such as Nucor, some of the names like that, are now doing a lot of production, and they need the coal to do that. So that's part of the reason why the coal group has been in the top, in the top 10 in terms of the groups now for almost, I think, going on 6 months or so. Now the question is, can you buy this one? Well, I don't know, but it doesn't. This looks like a pretty good company. But again, I'm not an expert in the coal area. This is one of my least capable areas, but it has an excellent checklist. On the technicals, it does look fairly good. I mean, now, would I be buying this? I don't know. I kind of want something that's got a little bit more size to it. I would be looking at BTU, which is Peabody Coal. This is the largest coal company in the United States. It's one of the largest in the world, I think. Not necessarily the greatest place to get into this one based on the technicals, but if I were buying a coal company, I would be buying Peabody, probably not AMR. So that's kind of my take on it. I like the Peabody because of the size, and also the fact that they are sort of market setting. They can set a little bit. They have a little bit of pricing power now. Okay, let's see. Get in at 250. Okay, yearly chart. Get in at 245. This is on talking about Nvidia again. Let's kind of go back to Nvidia. Definitely a great stock. Nvidia, basically, a person from TikTok is saying they got in at 245. If they got in at 245, that is an excellent, excellent entry point because at 245, that's where basically it moved above that 200-day moving average. So that was a very good buy, and it was right when it moved to an uptrend. It went from a downtrend to an uptrend. So if you got into Nvidia at 245, you made an excellent, excellent buy. It was basically 245 back just really only about a little over a week ago. Very, very good. And since then, it has changed direction, and it definitely is moving higher. Now, it pulled back a little bit today, but the general trend is that Nvidia is reversed, and it's going higher. So if you got in at 245, congratulate yourself. Get yourself a beer because that is a good, good, good entry into Nvidia. So I still like the sector. It's been tough with all of the with all the turmoil here. Okay, question. Sandeep is asking about Google. I kind of got burned a little bit on Google. I still am very bullish on it. I think they have a tremendous kind of moat on their product and their services, and they're going to be splitting 20 for 1, and that's going to happen. Basically, I guess it's going to happen in August. In August, I'm not sure. I have to get back to you on that because I had this all memorized. But this is making a very nice move, and it's probably going to move up to at least 30.30. It's currently 28.42 right now, so it definitely has sort of turned a corner. It's trading above that 200-day moving average, which is, you really don't want to buy anything below that, but if it reverses and it moves higher like that, not a bad place to buy it. This is 100% checklist. So the question is, actually, Google is definitely buyable. There's just no question that it's buyable. The question you should ask is, Google, is it buyable? But the question is, how can you buy it and where can you buy it? And that is indeed the rub here. We've got to find a place where we can get in. Currently, the relative strength on is at 85. Here's what I would do. I would wait for it to pull closer to that 10-day line. I don't know if that'll happen or not. That's the problem. I don't know if that'll happen. But if you look at the technicals, we are approximately little bit more than 1.6% above the 10-day line. If you have trouble buying a stock, the 10-day line is not a bad place to buy a stock that's moving higher. So I think you could start to nibble on Google here. But here's the thing. I would not buy a full position on this. And the problem is this is a very expensive stock. So, it may be the size of the stock may be too large to buy a half a position. I mean, basically, if you look at it at $2,800, that's approximately where Google is right now. A full, if you multiply that times 8, you would have to have essentially just a little bit large, just for one share to buy one full position in this. You're looking at a portfolio size of about $20,000. Now, if you were to buy a full position in a $100,000 portfolio, that's 5 shares of Alphabet. And I don't think you really want to buy more than about a half position. So if you were to buy just one share at this point of Google, you would have to have a value on your account of about $45,000. So the total value of your account would have to be about $45,000 in order to buy a half position, which is one share. So another alternative would be to buy fractional shares, but I don't know if that works either. So here's the thing. This is not a bad place to buy Google. This is a good location. It's a good price to buy it at. The problem is the size of the valuation. At $2,800, that makes it difficult for many people to buy anything less than basically a full position. And I don't think you want to do that. I think you want to buy a half a position, which would be, if you were to divide your portfolio by 8, that would be 8 full positions. If you then divide that by 2, that would be 16 full positions. Well, you can see that a full position is about half a position is about 6.25% of the total value of your portfolio. I know I'm going into a lot of detail, getting into the weeds here, but that being the case, that would mean that you would have to have a significantly, your portfolio would have to be in the 50,000. Your trading portfolio would have to be in the $50,000 range in order to buy a half a position of Google at these prices. So that's the biggest issue with buying Google right now. You don't want to get overweight in it, and that means not buying quite as many shares. So tough way to go. Do you think it's too late to get into the coal stocks? ARM is up to like 900% in 1 year. That is true. Here's the thing. The thing about the coal stocks, I kind of know where you're going with this, and I kind of agree with you. I just don't like this area that much. When I'm looking for, and this is why I'm trying to show some of the stocks that are in the oil and gas area, which I think has a lot more potential in terms of numbers. I mean, there are many, many more stocks in that area, and there's some that can be very, very good, and they typically are dominating many of the plays. Now, if we flip on over to let's go here to the industry groups, and I like to show everybody this because this allows you to see kind of where everything is located. So let's take a look at the industry groups here. I'm going to pop this up on the screen, and right now on the industry groups, energy and coal is number 3 on the list, which is very strong. But there's 2 other ones that are actually stronger than coal right now, and that is in the international E&P companies and the Canadian explorers. So where I would look for potentially a buy wouldn't be in the coal area, just because it just doesn't have that many. It just doesn't have that many names, and that's the problem. There's not, it's going to be harder to buy something that's set up properly. But in the international E&P, which is the number 1 rank, 99 relative strength, this is kind of, I think, where you want to look for, for potential companies that can be bought, and it can still be bought correctly. If we look at the stocks in this group, obviously we have the huge ones like Occidental, ConocoPhillips, and Hess. I own Hess, and I own OVV. This is another one I think but there's also ones that are less expensive in this area. I have one called EGY, and it's a much smaller stock, but it's an international E&P player. I bought it, and I'll show you the chart right here. This is one that it's under $10. The stock, it's $6.59. Now, I don't totally recommend it, but I did do a starter position in here. I bought this morning. I bought 250 shares at $6.68. It closed at $6.59, so it's down a little bit, but it's a volatile stock. But I think that this one, you could possibly double on this one. It's you definitely could double on this one, because if you look at the past on this one, this EGY, not that long ago, actually in 2014, the last time we had really high oil prices, this stock was basically up there. Basically, it hit $9.40. That would be approximately a 30% gain from here. So that might make sense for you. This is EGY. There's another one, of course, that I was trying to show you today, TGA. Again, I don't own this one, and I just found this from screens today. This one is a $3 stock, if you can believe that, and it has huge cash flow. This is basically a natural gas play in Yemen and Egypt. Not necessarily a bad place to be looking right now, with prices of energy going sky high. This one has been in the past much higher, and it is now coming back to where it was once before. Basically in 2010, this was a $20 stock, if you can believe it. And it looks like, it may be on the mend. Now, it's going to have to move above about 4, but I think that if you're looking to put a more speculative stock in there, that might work as well, TGA. So long story, and I've gone way on this, but on the coal stocks, there just aren't enough to buy from. I want to buy probably in the oil sector because it's equally as strong, and yet there's a lot more that you can buy in that area. So that's kind of the long and the short of it. All right, let's look at Starbucks from Jay. Thank you very much. And he's looking at 93 on Starbucks. SBUX. By the way, I did buy Bros today, which is a potential competitor to Starbucks. I haven't been to a Bros, but I've been told by a lot of people that they're great, and hopefully that'll work out. It's off a little bit today, but here's Starbucks. Part of the problem with buying Starbucks at this price is that it has had this tremendous retreat, and it's trading well under the trading well under the 200-day line. The question is, if we can get to 95, 93, is that a buy? Well, that would mean that it would be moving above the 50-day line, but I still don't like it at these numbers. I don't like it at these numbers. So I would probably pass. Interestingly enough, I would probably pass on Starbucks. And it's really because it's under the 200-day line. That's the main reason that I probably would not be a buyer of Starbucks really at this point, because it has this downward trend, and that just doesn't work for me very well. You don't want to. First of all, you don't want to buy below the 200-day line, and you don't want to really buy in a downward trend like this. So I don't really want to short it either. So I just would pass on Starbucks altogether. And I can see that you might be tempted to buy it if it moves above 93, but I just would be super careful. Let's take a look at Bros. This is the one I did buy. This is an IPO, and it did pull back today. So I may have outsmarted myself here. I do like this stock, and it is, it has started to make its way higher. There was a buy point back in this October of last year, when it kind of came out of the box. I don't know if I bought Bros basically at 64.72. So I'm down. Currently, it's trading at 62.10. It made this move up and then it pulled back. So let's kind of look at the 10-minute chart on Bros to see kind of what's going on. What's going on. I think it's gotten some support at 62. We'll see. But it went up as high as 66 on Bros. So who knows? But I definitely would not be a buyer of Starbucks at this price. I just don't think it's worthwhile doing. What about the Qs? QQQ. Well, let's go, and I want to show you this little chart that I have. It's kind of an interesting one, and that is basically this is called the Etf strategy, and basically the way this works, very simple way that this works. And basically what it is that if the market is in a confirmed uptrend, which it is, that confirmed uptrend started on the 16th. If we were to have bought, and I did, if we were to have bought the Qs on the 16th after it closed, because that was the confirmed uptrend day, and then we were to hold it to today, we would be up 7.87%. The question is, can we get in at this level? Now, it did pull back today. The Qs obviously pulled back because they represent the NASDAQ 100, which is the 100 largest stocks in the NASDAQ. So that's where, Apple is, Microsoft, Tesla, those kind of stocks. We did pull back today at the 200-day line. So we made this tremendous move, and we've pulled back a little bit back. But look at this. and this is a very telling sign. After hours, we're up. Again. So we pulled back, we tested, we've pulled back up. The question is, can we get beyond this 200-day line? That's the key. The 200-day line is at 368, and we're currently at after hours 367.90. So we're basically right on the 200-day line. If we can move back above this 200-day line, I think that the Qs are going to move higher. That's indeed my opinion on this. So one of the great things about the QQQ is you get exposure to all of the largest stocks in the NASDAQ. So that's a very, very good sign. So what do I think about this? Well, I think I would wait to see if it could close above that 200-day line, but I'm still relatively bullish on, I'm actually very bullish on the Qs. And if you haven't yet gotten into the Qs, this might be a place where you could start easing into the Qs. Really, the signal to get back into the Qs, of course, was that that day where we went with the follow through day, and we moved from a market in a correction to a market that is moving higher. So that's that's definitely the key. The key here. So that's essentially how this strategy works. If we are in a confirmed uptrend, you want to be 100% in the Qs or another index fund like the Spider. And then if we move to a uptrend under pressure, hopefully we won't, because we hopefully are on a power trend here, at least for a while. But if it does move to an under pressure situation, sell half of the Qs, keep half in cash. And if it goes to a correction, which we just came out of on March 16th, then you want to be 100% in cash. So that's kind of the way to play it. But this way, if you do this on a regular basis, you are probably going to outperform not only the S&P 500, not only the other index funds, but you're going to probably outperform a lot of the paid money managers on Wall Street. This is an interesting strategy, and it's actually very easy to implement. I'm going to be trying to build an app for this. This is one of my projects this year, but I definitely think this is the way that just by using one or two of these index funds, you can beat most of the other stocks in the market. So great question on the Qs. Thank you very, very much on that. Now, question on the TQQQ. What the TQQQ is it is it's like the Qs, except it's a 2x. It's a double, and it uses options to achieve a two-time volatility to the QQQ. Basically, it moved up, of course, just very similar to the Qs in the way it looks, and then pulled back. It's a little less expensive, of course, because this, instead of having actual shares of the components of the QQQ, this is the options of that. So interesting way to play it. I probably would not be in the TQQQ. I like just having the Qs directly, but it's really a matter of matter of preference. There is another ETF that is used for short-term trading called the SQQQ, and this one moves against it. So if the Qs are up, the SQQQ is down. This one, the TQQQ, moves with the QQQ. So if the QQQ is up, typically the TQQQ will be up 2 times that. But be careful, because it uses options to do that. It tends to be much, much more volatile. So definitely something that you don't want to go for. It's not really an investment. It's a short-term trading vehicle. So that's something that you have to look at. Well, I have gone through almost all the questions here. One last question on Facebook. And of course, that's now called Meta. So FB, Facebook, is is basically trying to make some progress. Once again, it's trying to move its way up from the bottom. Basically, was below. It's in this rally. It moved all the way up from basically about 185, above 200, now to where it's at 228.50. So the question is, Is it going to continue higher here? I would be super careful. Part of the reason is because of this tremendous drop that we had. So I think that at least in the short term for Meta, the top, the sort of the resistance is at 250. Here's the problem with Meta. You have tremendous overhead supply. So that's one of the things that is really tough about Facebook. Facebook, has tremendous, has very high overhead supply. And what I mean by overhead supply, well, overhead supply is what happens when people buy higher, they hold, and then when the stock comes back, when the stock comes back, then they want to sell. So what happened is there's a lot of people that were up in the top of the range up here, and then as it fell, they held on, and so now as it comes up towards 250, I think you're going to see a lot of selling into that into that situation where you have the overhead supply. So I would not be a buyer of Facebook right now. I just think it's too volatile and too risky. All right. Well, thank you very much, everybody. And I hope that you come back tomorrow. Thank you always. Basically, if you're not on the action trade alerts, super easy to do. All you have to do is go to www.Dallas Trading Floor, put in your first and last name, and we'll get you on the list. We have some great stock screens, other kinds of stuff that come out all the time, ready list, that kind of thing. But you got to be on the action trade alerts. Very easy to do. www.Dallas Trading Floor. Also, if you're watching on TikTok, you can easily get on the list, and it's free. All you have to do is go to my profile, click on the link, and it will say it just first and last name and an email address, and you'll be right on the list for the free Dallas Trading Floor action trade alerts. All right, I think that's the last one. Oh, Ford. Okay, well, let's do Ford. Just the last one here, and that has not been trading as well as we would have liked. I'm afraid it's really a tale of two cities when it comes to when it comes to the automobiles. It's really Tesla and everybody else. We are above the 10-day line, the 200-day line. That's this black line here, but it's very, very weak. We're still in a downward trend. Not a good buy right now. If you have this and you're down more than 7%, consider selling at least part of your position. I don't know if it's going to go lower, but right now it's sort of dead money. So, unfortunately, Ford is not making the kind of headway that we like. So, it's not necessarily a bad stock, but it's not performing. I want to be in the very, very best, the leaders. Unfortunately, Ford is not a leader. It's not a leader in the automotive group. That really is Tesla only. I mean, compared to everybody else. Unfortunately, fortunately or fortunately, depending on how you look at it, they've got a lead on everybody else in the market. So Ford isn't really making the kind of headway that we need it to make in order for it to, kind of turn the corner and, and make it possible. So just not really working as well. Just not working as well, as we would like. I mean, it's just that simple. So I don't think you can really buy Ford at this level. But there is one thing that we do like, and that is when you like this. So please like us on the show, and that helps us get out to a lot more people. Again, of course, consider coming in for the action trailers. They're free as well. I'll be back tomorrow at 5 o'clock. Hope to see you then. Everybody, happy